Good evening and welcome to the Trading the Tech Show. My name is Derek. Today is Sunday, January 10th, and this is iLi Academy. So I hope everybody had a great weekend. I had a wonderful weekend. Was able to get a lot of things done this weekend that had been taking some time, but I was able to complete them. So I'm on a high going into the week, which is always a good thing. Had a new, one of the newer clients had his installation today. He just actually returned from Brazil to America. So we set him up a little bit here, but then when he got to America, he's going to use a different computer. So we were able to set that up to today. So pretty much on a high. We're actually on a roll here. I think we're going to be, doing very well here. Clientele wise, we're kind of building at this point, and it's coming along pretty well. So I hope everybody else's weekend was good too and productive. So we'll see, what type of opportunities have presented themselves for this particular week. And know that this is Sunday night. So we're going to take whatever we find with a little bit of fine grain of salt because it's Sunday night. We just opened the market. We really don't particularly get direction until just a little bit later on. So we're going to take a look and see what it is that that presents itself or looks like it might be setting up. We may or may not go through every single chart tonight because it's Sunday night, and any of the ones that really just don't have opportunities we'll probably omit. So let's start here with the Aussie CAD. We're looking at the Aussie CAD right now. We can see that the rate is still above our 720, which is just peeking out of the bottom down here. We see that our moving averages are trying to now jump over our 200 to the downside. We've got our 8 and 21 over the 200. The 50 and the 100 are still hovering above, but the 50s even dropped below the 100. So we're definitely not in order to the upside there. So we don't have our mature trend that we tend to look for. But we still respect the fact that we are above our 720. So even though we've pulled down here well below our 200, our opportunities would be to buy on this 200. If you use the 21, you can use it. I've said before, there's no rule saying that you can't use the 21 as your entry point. I personally just want something a little bit longer. So the way I've kind of, made the strategy is for the longer term moving averages. But in this type of instance, because it's so far underneath the 200 and the 21 is jumped below the 200, we could use that 21 as well. So I would drop my order here personally to buy right here on the 200, and that's sitting here. If we click on that, right click, trading, go to buy stop, it's at 0.9844. All right, so that's about the opportunity that we have. Now, if this continues on down and it's definitely not going to come back, then we will just delete that order. As far as the Aussie yen, it's kind of pushing for the same thing here. Everything's above our 720. We see that right away. We're looking at the rate pushing down here towards the 200 right now. So our opportunity would be, since we're not past the 200, our opportunity would be to buy on this 100, which coincidentally is quite right where the 21 is sitting right now. Or we could be a little more conservative and go here on the 50 in blue. So what I'm going to do, let me go back here really quickly. I want to change something really quickly. I'm going to right click on this because I realize this is a little bit dark. So I'm going to go ahead and make it a lighter blue. Maybe something like a turquoise. There we go. And maybe we can see that a little bit better. I'm going to right click, go to my template. I'm going to save the template. And I'm just going to save it under the right name. This is platinum. So I'm going to save it under the platinum trade name. Here we go. Yes. And as we go, I'll just change these charts as we go. I can just right click and apply the template and it will make all the templates the same. So, all of the charts will be the same. So there we go. So you can see that blue line just a little bit better now, hopefully. And so that would be my 50. So I can trade on my 100, my 21, my 50, whatever I want to do there. If we continue down below our 200, I take the order that resides up here and pull it down to my 200. but I want to see it get a little bit of distance below the 200, maybe 10 pips or more below the 200, and then I can drop my order on the 200. That just improves the order. So the idea is that it should go back in the direction of the preferred trend, or the preferred direction, which is to the upside. Now, looking at the Aussie New Zealand, we don't have as deep a pullback going on right now. We did kind of pull back here a little bit, but then we created a new high as well, kind of at the beginning of the day. So this one is just a little topsy-turvy right now, but the 720 is definitely below all of the moving averages and below the rate too. So we're going to assume that the direction, the preferred direction, is going to be to the upside. And so as this pulls back, it's getting a little bit below our 50 right now. So if it gets any further below the 50, we can drop it on there to buy. If it goes down here to the 100 or below, then maybe we can drop it on the 100 once we get enough distance. So we'll be watching this one for the Aussie New Zealand to see how that kind of turns out. Now, the Aussie US has pulled down below our 200 here. We can see the rate and everything is above the 720 moving average. So we're still bullish here, even though we're getting these nice pushes to the downside. This is actually giving us a little momentum to the downside, but our overall bias, our overall preferred direction isn't changed. And so that's why we differentiate ourselves a little bit from other, teachers out there, other individuals out there, because we still kind of stick to our guns as far as direction, because direction is everything in the Forex market. That's where you make your money. So looking at this, it's pulling back now. So we could drop our order on this 200, or maybe even on this 21. I rarely use the 8. I'm not going to use the 8 because it hugs the price so close. But the 21 is about, the earliest one you want to use. But if you want to be real conservative, you can use this 100 or this 50 here. CAD yen, we're trading above our 720 again. So we can see that we've got this trajectory a little bit to the downside here. We've got a little bit of a floor going on here just above our 200 moving average. So we haven't broken that. We've got our moving averages up here, kind of all in the same area. If we're going to buy, I'd say place a buy order at that 81.77 mark. And then hopefully, that will be placed into an order that goes positive. Swiss yen, we're trading above our 720 here. We can see the rate now is coming down here and touching the 200 as well. So we're getting a lot of this great pullback action going on tonight. We can see that we can drop our order here on where the 21 and the 100 are converging at in this one particular area here. So, that's a great spot. Or we can put it on the 50 as as a little bit more conservative trade. It's not a whole lot of pips, but it's just a few more to make the price move your direction before it picks you up. Euro Aussie is trading below our 720. We had this nice trend. You can see where it's been trending to the downside. A lot of this time we've got mature trend going on. So we're looking at it now, and we had a couple things happen here. We had a breakout bounce trade because look, we had this low that was created here. And then we traded around. We didn't really quite break the low here. We got a wick just a little bit below, but it didn't close below it or anything like that. So the candle, the body of the candle is really kind of high still, still higher than the previous low. So, basically we could buy here because once this is kind of a breakout bounce, it comes down, creates a low, bounces, comes back to check the low. If it breaks it, we don't have anything. But if it doesn't break it, it typically trades off to the upside. It's just a pattern that we see. So, when we see this pattern here, kind of like almost like a W, but it doesn't have to be pointy in the middle. It can I like to see it where it rounds off in the middle. I don't like to see it sharp. I like to see it kind of round off, give us a little bit of space here. And then typically what I'll do is I'll draw kind of like a rectangle in the space. And that's going to tell me, the top should be right around the bottoms of the candles, kind of in the arch. And then the bottom, we can kind of run that out to where we want it to be, however you want to do that. I typically don't go all the way to the bottom, maybe about 50% of these drops here from the top to the bottoms here of these wicks. I pretty much will go like 50% or so. It's just kind of a gauge. There's no real rule for what you have to do there. But I just kind of draw a little bit of a rectangle there, and those are going to be my entry points. This will be my first entry point. This will be my second entry point, or my last entry point. And then anything in the middle, if you want, that's perfectly fine. But that's kind of the sweet spot. So if it comes over here and it's not broken the low, the previous low, then our expectation is going to trade off to the upside. And so we try to buy, somewhere here in the arch. Sometimes it's more pronounced than this. This one is not quite as pronounced, and the candles are a little bit bigger in the archway. But cool, that's one trading strategy. That's breakout bounce. But now when we look at trend, we're seeing that we are below our 720. And so we've pulled back now. We're headed towards our 200, but we're past our 100 by enough. So we could short this, this particular pair on the 100. And then if we want to use the 50 and the 21, because they're kind of in the same area, we can use those too. But if we're going to be a little more conservative, I would have no problem placing my order to short here on the 100. So there's a couple of opportunities that kind of presented themselves there. It's just kind of, training your eyes to see what, to see what might show up. And so when you've trained your eyes a little bit on it, you can say, okay, I've got a couple of different opportunities here, a couple of different things that might show up for me. So let's take a look at the Euro Swiss here. Let me go back here. Nope, actually Euro CAD, I'm sorry. We didn't go over this yet. So I see that we're trading below our 720 here. Our moving averages are all in order to the downside, and they're wide open. They're not crossed over each other. So we have a mature trend to the downside. So when we look at this, our expectation is that it's going to continue to the downside. We're waiting on pullbacks past the 100 or the 200. We got that on Friday's trading day. We got a pullback past the 100. If we didn't drop our order here on the 100, we could have dropped it on the 50, and we would have very, very quickly had a nice winning trade. All right. Good, good. So now we're waiting on the same thing again. We need to wait on this scenario where it pulls back again past those moving averages. Here's the Euro Swiss. We see the rate is trading below our 720, which is coming across the middle here. It did actually has a little bit of a support here. We did cross through it a little bit, but you can tell that traders were not exactly excited about crossing over the 720 here. But then once we did, now we're coming back here maybe to test the 720 again to see. Now, I have two schools of thought on this, and you have to decide what you want to do as a trader. This is kind of where you fork in the road and say, okay, I'm going to be a little bit more conservative trader, and I want to see all of the moving averages on one side or the other. Here, we don't have that. Our 21 and our 8 are below, but our 50, 100, and 200 are all above the 720. So you can say if they're split like that, I don't want to trade. But if you decide, you know what, that doesn't really bother me, I still feel like the preferred direction is in, I would use one of the longer moving averages as my entry. And I'd probably pick the one the furthest away from the 720. So that's where you kind of have choice in this particular strategy and what you want to do. Let's go here to Euro Pound. As far as the Euro Pound, we can see that we're trading below our 720 here. And so all the moving averages are below the 720. The 8 has just kind of jumped over the 21 here, but not by much. So we can consider this trend to the downside. We're a little bit sideways in the action going on here, but we respect our 720. We respect the moving averages all jumping over. So I'm waiting on pullbacks past my 50 or past my 100. Now, these might widen out a little bit. Maybe once the rate starts to fall a little bit, it'll start to widen out those moving averages, and maybe we'll get some more opportunities with that in the coming weeks as well. Euro yen, we see that we're trading here above our 720. We've dropped well below our 200 here, so we can actually drop our order to buy on this 200. The 21's kind of right in the same area. And then we've got our 50 and our 100 in the same area too at this 127.06 mark. So if we can place an order here, maybe to buy, a buy stop here or a buy stop here on the 100 and the 50. So if this order continues on down towards our 720 and it doesn't actually break the 720, it may bounce back. But if it does, we may consider closing off the order or just closing it out. It's pending. It didn't cost us anything. It just, it's just pending there waiting to be executed. And if it doesn't, then we can delete it. As far as the Euro New Zealand, we're trading below our 720 here. Our rate has jumped up here past almost, well, it is past right now the 200, not by a whole lot, but it's past the 200. So you know what that means. We can drop our order on pretty much the next levels down, would be our 21 or our 100, just depending on how, you know, which one you want to do. And 50 here as the most conservative. Okay. As far as the Euro US, you can see that we dropped rate well below our 720 now. We've got the 50 kind of coming over the 720 as well. And so but our long-term moving averages are above. So this is where you kind of look at it and say, okay, I'm going to make kind of an executive decision here. Like I have this buy stop that's still sitting here. Probably just go ahead and push it down just a little bit. Maybe I'll bring it down here to the 100. I'll accept the little agreement for the one-click trading, because you need to accept one-click trading so that you can do that and then close trades, with just one click. So let me grab this again. I guess it moved. I'm going to grab it, stick it right here on this 100, and that's my new order. So if you say, if your plan does not allow for trading when the moving averages are straddling the 720, then you would ignore that trade and just say, hey, maybe in your journal markdown on a Sunday night, hey, as far as the Euro US, the rate is below. I'm waiting on the rest of the moving averages to jump below the 720. Make a quick note like that so that you have a note for the week to be mindful of that particular opportunity when it shows up. Now here's the pound Aussie. We're trading below our 720 here. Everything is below the 720. We're not in a trend because our moving averages are out of order here. However, our rate is well above our 200. So we can drop an order either on the 200 or on any of these moving averages down here, except for the green 8. I forgot I was supposed to be changing the colors, but I just kind of forgot about that. It's a little late, but I'll change them tonight. Pound CAD, we are trading well below our 720. We can see that the moving averages are in order to the downside here. So that's a mature trend. It's not quite wide yet. We see that we've kind of developed it back here and then it kind of petered out. So we're trying to develop it again. We've kind of developed it again. Let's see if we get more distance on this, but we need to pull back past the 100 or the 50. We need to pull back at least to those levels before we'd be interested in shorting. Now here we go with the pound Swiss. We're trading above our 720. The rate here has pulled down a little bit below the 100. So if you want to drop it on the 100, I would maybe drop mine on the 50 or this 21 here, if that's what part of your plan. We can drop it on the next higher levels, because we really want the rate to kind of move our direction and kind of commit to that before we get interested in taking the trade. So sometimes we want to create that little bit of distance. Even though we're giving up a little bit of pips, we're still kind of creating a little more distance that the rate has to move to kind of commit to our direction. Pound yen, we're trading well above our 720 here. We've pulled back past the 100, and now we're headed down here towards the 200. So we can drop our order here on our 100 moving average, or conservatively up here, maybe on our 50. And those would be our buy orders in case we bounce off this 200 and head off to the upside, and then boom, we've got a nice trade. Let's take a look at the pound US. The pound US is trading well below the 720 here. So we can see that, the moving averages, the other moving averages are still above the 720, even though they're kind of spreading out and pushing downwards and kind of creating trend. We're going to respect the fact that the moving averages, the rate over time is not below this 720. So that's basically what it's saying by those moving averages, is like over, a length of time, 50 or 100 or 200 periods, the rate's still above that 720. So that gives us the idea that the momentum is to the upside and the preferred direction still to the upside, but we may be just pulling back here a little bit deeper than normal. So that one we may not place an order on at all. New Zealand CAD, we can see that our rate is down here testing our 720 now. The moving averages are pretty much all kind of gotten to the, started to fall to the downside here, but they're still all above our 720. So I'm a buyer here at maybe my 50 or maybe my 100 and 200 that are converging here in the 91.99. Let's call it 92.92 area. And if we never get executed on that and the rate decides it wants to keep on going down, we just clear that order and we wait for an order on the short side. New Zealand Swiss, we can see that we're trading above our 720 and then we're trading below the 200. So we'll be waiting on that to move back to the upside. Our order should go here, maybe on the 50 and the 100 converging at 0.6406. New Zealand yen, kind of the same story, right? You can see we're trading above our 720. We've pulled back here well below our 200. And then we've got our 50 and our 100 up here that we can use as conservative entries to buy. New Zealand US, we can see that we kind of fell down here pretty close to our 720 as far as the rate goes. The moving averages are falling now. We are waiting on the 100 to jump over the 200 here. It would create a downward trend. However, overall, the big trend is not out yet. So we haven't crossed over our 720 as far as price and definitely not the moving averages. So I'm a buyer here. So I would buy at, maybe one of these conservative areas, maybe the 200 or the 50 or the 100. One of these three I would be interested in buying. Let's move over to the dollar majors. We're looking at the US dollar CAD at this point in time. We see the rate is jumping up and testing our 720. And so our moving averages are not, however, jumping over the 720. They're still kind of hanging back. So I would definitely short maybe on the 200 or on this 100 moving average just to be a little more conservative. And then be careful too, because we're moving in an opposite direction that we have been in a long time. So the dollar here is gaining a little bit of strength. It kind of bounced off this low and now it's kind of gaining a little bit of strength, but that's not going to last forever. So we got to be careful getting caught in buy trades on the dollar majors. US dollar Swiss, we see this one did jump over the 720, kept on going here, jumped over the 720, and now we have to kind of wait until the moving averages actually get on the other side to call this a trend trade. Even though the moving averages are in order, I mean, everything except the 720 is in order to the upside. So there may still be some momentum to the upside on this. However, at some point, because it's dollar based, I feel like it's going to fall back. Now, as far as the US dollar yen goes, we see that we're just crossing over the 720. The 200 just crossed over tonight or Friday, and now we're starting to get a range of width between the moving averages. So that's pretty good. That shows that it's pretty open and it's flowing a little bit. So we're going to wait though. We'll need to wait until we get a pullback past our 100, past our 50 or past the 100 before we can place a trade. Now we did get this move on Friday back down below the 50. So we could have dropped our order on this 50, or if you were using the 21, either way, you would have had a profitable trade right now. So that's kind of the analysis for tonight. And, it doesn't take very long for us to kind of go through those and find out what opportunities exist. It's actually, a fairly simple strategy. We saw a little bit of breakout bounce too. I didn't see a whole lot of that, but I did see at least one. So we'll start to incorporate that a little bit more. And then maybe this week we'll start to incorporate some more catapult strategy as well, so that you guys have that too. We'll see what type of opportunities exist for the catapult. So I thank you for your time tonight. We'll go ahead and let you go. It's Sunday night, so I know you don't want to spend all your night with this, but this is kind of the setup for the week. Those are what we see going on, and hopefully we will gather some pips this week. All right. Well, thank you for attending the show. Once again, my name is Derek with iLi Academy. And if you have questions, concerns, if you have referrals, we definitely want to build business. This year is about building clientele for the business. So if you know people that can use this type of information and people that would be excited to get this information, let them know that we are here and that, we've got a great price for our services, but for manual traders, we do have a package that's basically like $1 a day. So it's like $30 for the month, but you get these shows, you get access to any tools and things that we place on the website. And, you can learn our strategies and trade on your own. Not everybody is interested in the auto trader, but we have that too. So we have the 4 auto traders that you can use, that we can, that we've developed too. So, and I like it because everything is proprietary. I rarely use anything that I don't own, as far as, algorithm wise and all that type of thing. I don't try to use it if I don't own it, because, I like to know exactly what's in it and be able to explain what's in it. So, there's not a lot of companies that are out there like that. There's a lot of companies out there, some of them have their own like strategies and things like that, but there are people that are using other people's stuff, to do their strategy. So I just like to know what ingredients are in my cake, So, all right, I'm gonna get out of here and stop ranting. My name is Derek with iLi Academy. Thank you so much for your time tonight. Have a great one. Bye-bye.